Happy Tuesday, everyone. Hope you guys had an amazing day today. The market is coming to a very important level, and basically, essentially, we need to see whether it's going to make a decision and what the decision is going to be. All right, so in today's video, we're going to take a look at the overall market and what my thoughts are moving forward. So this week, I thought that we were going to end up falling lower into Monday and Tuesday. That was the case, right? We were going to bounce. That was also the case. But now, similar to what happened after this big downturn at the end of September, we did have days where we did bounce only to make another low. So that's what I'm assuming is going to end up happening. Today, I was expecting us to bounce back up to, I was saying that going short at 384 would be a very, very good level. We never even got to 384. So that is not a good sign, essentially. It's not a good sign for bulls because while we were very overextended to the downside on the Bollinger Bands, you see how we opened and closed outside of the Bollinger Bands, that was still not enough fuel to come and retest a level of resistance, a major level of resistance. So that in and of itself denotes a lack of buying pressure. So the fact that there was not enough buying pressure on a very, very weak, extremely weak day today, algorithmically overextended to the downside, is not a good sign for bulls. So in general, right, tomorrow, this Bollinger Band level, we won't be overextended to the downside anymore. We'll be trading within it, which means that we won't have an extra push of buying pressure to the upside necessarily. We could have another day, but if the overall momentum is still very weak, and then the Bollinger Band starts to vomit, it's going to continue vomiting into tomorrow, right? And then but we have like an open over here that gives all this room to fall to the downside. As this, say for example, this is a candle, right? Whatever. Once this candle, essentially, we're opening inside the Bollinger Band, and then we could close again outside of it. But we won't be overextended to the downside. We just got one close outside of the Bollinger Band. Whereas today we had a open and a close outside of the Bollinger Band. So if we get a bit of a bounce tomorrow, the next 2 or 3 days can still, we can still have a lot more downside potential. Unless we start showing a lot of strength. I don't know if that's going to be possible. But overall, yeah, we're going to need to see a lot of buying pressure and buyers to step in. And I would say we would need, at least the safest place would be, we would need to close back above this high here. So we would need to close back above 377 to 387 to 388. I'm not sure if that's going to be possible tomorrow, given how much selling pressure there is. So my thought process is, to make a long story short, tomorrow we're not going to be overextended. We would need, so essentially around 384 to 385, it would be a good place to look for longer term shorts with a stop loss. The next best place to look for shorts would be 377 and 378 for longer term shorts, for potentially another leg down, right, where we break these lows, right? If we end up breaking above 388, then the day after we break above 388, I won't be taking any swing longs. I would just be leaning long in day trading. So yeah, essentially that's my thought process with all of this. I really thought we would get more of a bounce given this really, really strong overextension to the downside. And yeah, I mean, we could continue showing weakness into the end of this week, into the early days, into the early half of next week. And then we could start rallying, off of wherever we rally off of. Say, for example, we rally off of 373. We could start rallying off of 373 Wednesday, Thursday, and Friday, and then shoot up to 384. So, yeah, there's that. Essentially, that's really it. We can quickly take a look at the bonds. When the bonds go up, the stock market should also be going up. but you can see, you know, the bonds are clearly showing a lot of weakness. We had trouble breaking above, and this weakness is shown in the stock market. The VIX is all messed up here. It has an inverse relationship to the market. And then when we look at the dollar, you know, we had 2 red days. We bounced a little yesterday, and then we continued falling lower today. So we aren't like breaking any major levels of support, but yeah, I mean, when you look at the NASDAQ was also very overextended to the downside. The same concept is going to be prevalent in the NASDAQ tomorrow and on the IWM. Everything is going to open inside the Bollinger Bands. We are not going to be overextended to the downside, and we're going to need a continuation of buying pressure for this bounce or this move to sustain itself. But overall, we're most likely only going to have maybe like 1 or 2 days where we show some upward potential, only for another leg down. That's what my thought process is. It would be a picture perfect Christmas rally if this were to happen. We bounce a little bit for a day or two, create a new low, stagnate a bit, and then into the end of the week, into the end of the month, like the end of next week, we end up rallying a bit. So yeah, that's my thought process. We can see how that plays out day to day. But aside from that, I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Thank you.